Welcome back to Street Smart. Well, Fed Chairman Ben Bernanke told a congressional committee today that the central bank stands ready to act if the economy falters. Well, joining us with his analysis of what the Fed could and should do now is former Fed Governor Randall Kroszner. Welcome, Professor Kroszner. Good to see you, as always.
Great to see you.
Well, if the economy is faltering, I mean, we had a spate of reasonably good data recently, but I don't think anyone is suggesting that that was particularly strong data at this point. So what are they waiting for?
Well, we're going to get the employment numbers soon, and that's going to make a big difference because that's one of the most important pieces of the puzzle. Is trying to figure out whether employment is going to take off or whether it's going to stay at the very low level. Unfortunately, I think it's more likely to stay at the very low level of growth that we've been seeing for a while.
We were speaking to our chief Washington correspondent earlier, Peter Cook. He was talking a little bit about the Fed coming under some pressure and perhaps their new dual mandate once again taking central stage. What would happen if the dual mandate changed? Would that actually have a material impact on our economy at this point?
I'm not sure it would actually change much in terms of substance. There are a number of other countries that have something that's much more focused just on inflation rather than on inflation and unemployment. And the policies that many other countries are pursuing are really not that different than what the Fed is doing, given the economic circumstance. So I'm not sure it would really change the substance that much. It would certainly change the way we talked about it, but I don't think it would change the substance that much.
And as an economist, you spend a lot of time thinking about things that were done, but it's all really backwards looking. It's not going to be for many years that we know whether or not Chairman Bernanke's policies actually helped or hurt the economy. But what would have happened had we not had this much liquidity injected into our monetary system?
Well, I think we have the lesson of the 1930s. Chairman Bernanke is a student of the 30s. I was a student of the 30s. Many other people at the Fed were also students of the 30s. The Fed did nothing. It just stood by as the economy just sank. We had very strong deflation. The price level fell by about a third, and the Fed just said, no, we're worried about inflation. We don't want to do anything. So we learned very strong lessons from that and said, we're not going to just stand by. We're going to try to prevent a deflation. And I think the Bernanke Fed has been very successful at that.
Do you think going forward there's something else he should be doing? Should QE3 be the next sort of Fed embarkment?
I think it really depends on the data. The Fed has now done something new, the so-called Operation Twist of keeping the short rates really low and bringing the long rates down too. That'll probably have a little bit of a boost, and I think the Fed will be in a little bit of wait-and-see mode to see what kind of impact that has on the economy. But we also have to wait and see what's going to happen in Europe.
All right, let's talk about Europe and the central banking policies there. What specifically are we waiting for? We were talking a little bit about a headline that came out from the Financial Times, seemed to turn markets around a little bit, but given what we've seen over the last 2 months, that could turn on a dime.
Yeah, a lot of false hopes out there, and so I think the Europeans still have to get the special facility passed through 17 legislatures. I mean, we have enough difficulty just in the U.S. They've got to get everyone to agree on this particular package, and then once they agree on it, they've actually got to implement it and figure out what they're going to use it for and how they're going to use it. And so there's a lot of uncertainty that's there, and I think there could be some negative spillover effects if people lose confidence that they're going to do the right thing.
So it seems like all those countries don't agree. Many are demanding collateral as it relates to the EFSF. But what can European policymakers do that would be the most positive, at least from the market's interpretation, step at this point? Would it be to create a new BandAid as it relates to the ECB, to be able to say, no, all nations have to fall in line when we decide on something?
I think enough with the Band-Aids. That's the problem. It's always a little Band-Aid. The wound gets deeper and deeper, and this is a major wound. You can't just keep putting Band-Aids on it. And that's what the Europeans have been trying to do. That generates enormous amounts of market uncertainty. They just have to come up with a very clear policy. Here's what we're going to do, and here's what we're going to deal with it. Now, and they can choose restructuring or default. They can choose to backstop the banks. But the key is that they just provide clarity, and then the markets can work with that.
All right, let's talk about clarity here as it pertains to the U.S.
Sure.
We were just talking during the commercial break. When we talk about Fed Chairman Ben Bernanke, of course, he has one big lever he can pull, really, which is monetary policy.
Exactly.
Very powerful one. Then there's also fiscal policies, right? Yeah. Washington is filled with people who are able to sort of help or hurt the economy. Trade seems to have become a top priority for the administration. What should they be prioritizing, and what would have the biggest impact right now on the economy in the shortest period of time?
I think they've got to provide a lot more clarity about where the fiscal situation is going, and I think both in the short run and the long run. Another very important piece of that is trade. I'm really heartened to see that we're finally going to get these free trade agreements, which are very beneficial to the U.S. going. That really will help to boost exports and boost job growth.
All right, we have to leave it there. Professor Kroszner, so good to see you once again. That, of course, is Randall Kroszner, former Fed governor. Randall Kroszner, now a professor at the University of Chicago Business School.